Zscaler beating analyst estimates for its fourth quarter on the top and bottom lines, but the full year 2025 guidance overshadowing those results. So here to walk us through the print is Zscaler CEO Jay Chaudhry. Jay, it is always good to have you on the show. Let's dig into this report, Jay, because this is the first time we had a chance to speak with you about it. This was a good report, Jay. Listen, 30% revenue growth, 27% billings growth. I do know, Jay, some on the street, though, said that guide for 25 appeared disappointing. Their words, specifically billings. So walk us through that, Jay. What are you seeing in the business?
Yeah. So Josh, it's good to be back on your show. Our numbers were very strong for Q4, as we said, across all metrics, top line, bottom line, cash flow, everything. In fact, we crossed $2.5 billion in annual recurring revenue, a big milestone for us. Our guidance for fiscal 25 is 19 to 20% year over year at a fairly large scale. So I think in general, investors expected that. What they got a disconnect was the growth in the first half for billing was lower because of historical reasons, because of some of the contracts we had from fiscal 23, which was a top period. The second half, billings growth is very good. The two combined together leads to 19 to 20%. So as I met with a lot of investors, we have cleared this confusion or disconnect. I think overall we are pleased with it, and I think investors understand it. We have a lot of opportunity in front of us. We're seeing good opportunity. In fact, we stated during the earnings was we expect to cross $3 billion in annual recurring revenue this year.
So I guess you're going where I wanted to go, Jay, because, I guess bottom line for investors, Jay, you've been in tech a long time. You've seen a lot of cycles. Markets evolve, though. They change. Competition's intense. Is Zscaler, Jay, is it still bottom line the growth story that bulls believe it is?
So Zscaler is the growth story. We believe in it, and we are investing for growth. If you think about three main areas for growth, the market needs better cyber. The firewalls and VPN-based solutions aren't working. Zscaler pioneered zero trust architecture, so customers want it. It's a big market. We pioneered zero trust architecture. We are the biggest brand that customers know. Over 35% of global 2,000 companies and 40% of Fortune 500 companies depend upon us. So yes, we are going through some of the sales organization changes where we're taking a step function. We're taking our sales organization to the next level where we can go from $2.5 billion to $5 billion plus beyond ARR. We have the products, we have great and happy customers, and I think we're well positioned to provide some great returns to our investors.
Jay, let's talk about competition. There's Palo Alto. I recently spoke to Shlomo Kramer over at Cato Networks. I'm just interested, Jay, how you're seeing the competitive landscape right now and your place in it.
We haven't seen a lot of change in the competitive landscape. Yes, there are a bunch of entrants. Those entrants are going after the lower end of the market because the large customers are very picky. They're very demanding, and we have established a sizable lead. When it comes to large enterprises, we do extremely well. In fact, some of these entrants who tried to go to large enterprises haven't fared well. So today, we are at 40% of Fortune 500 companies. In fact, in the last year, in fiscal 24, we doubled the number of large customers, which is G2K, as compared to fiscal 23. We expect to really do extremely well in the large enterprises, where the newcomers, they come from old legacy architecture. Most of them are based on firewalls. Spinning firewalls in the cloud as a virtual machine is like taking your DVD players and spinning them up there and calling it Netflix. The architecture we have, the barrier to entry to come to what we need to do in a market that requires resilience, I think we are extremely well positioned.
Jay, always love having you on the show. Thanks for making time for us.
Josh, thank you.